I do think that for their own benefit, if you're sitting on 30, 40,000 tons of gold, wouldn't you want to revalue that higher at some point? So yeah, I think absolutely China is in their best interest going to revalue gold higher. And one of the things that does is it makes it really hard for anyone to catch up to their hoard because it's so costly to purchase each ounce. So, I mean, if they revalued it to pick a number, 10,000, 20,000, 50,000, whatever, it would make it really difficult for nations that didn't have gold but want gold to catch up in the game.
Gold prices declined on Friday, but are poised to record their third consecutive quarterly gain as traders await key U.S. inflation data for insights into the Federal Reserve's interest rate cut timing. Emerging markets and developing economies' central banks maintain a positive outlook on gold's future role in their reserves. Data from the World Gold Council indicates that central banks increasingly view gold as a valuable financial asset, rather than just a historic keepsake. Although China's central bank paused its gold purchases in May after 18 months of consistent buying, leading to the largest daily drop in bullion prices since November 2020, an annual survey revealed that many central banks still expect to increase their gold reserves within the next year due to ongoing macroeconomic and political uncertainties. Of particular note, and highlighted by many famous investors, including Bill Halter, is the speculation about China's true amount of gold. While China officially claims to hold around 2,700 to 2,900 tons, estimates based on production and imports suggest a much higher figure. With annual production of about 400 tons and substantial imports, China could have accumulated between 25,000 and 40,000 tons of gold over the years. Bill adds that emerging a Brics currency, potentially backed by gold, is a significant development. This new currency aims to counter the US dollar, marking a new financial era for the alliance. For this currency to facilitate global trade, either a substantial gold reserve is necessary or the price of gold must increase significantly. This scenario could motivate China to revalue gold upwards, making it exceedingly costly for other nations to build comparable reserves and maintain China's strategic advantage. If gold were revalued to $10,000, $20,000, or even $50,000 per ounce, it would further solidify China's leading position in the global gold market. We will present clips from Bill Halter's interview. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
I think you're already starting to see that. That's why Shanghai prices are $30, $40 higher on gold and $3 to $4 higher on silver. You're already seeing the cash markets, the jaws are starting to open between the cash markets and the paper markets. And what's happening is you're having buying on LBMA, buying on COMEX, getting metal delivered out, and it's being shipped to Shanghai. I think you're already seeing that. And going one step further, and this there's questioning now of the amount of gold held by China. I think they say they own like 2,700 tons or 2,900 tons or something like that. And I'm going to say it was like 5 or 6 years ago, on the back of a napkin between what had been, first off, remember that almost nothing gets exported. There's no gold that gets exported from China. They have production of roughly 400 tons per year. And if you look at the Shanghai imports, I mean, those have been, sky high, 1,000, 2,000 tons per year. So even if you look at just the 400 tons per year that is produced within China, I mean, over 10 years, that's 4,000 tons. And they've been doing this now since, there's been a concerted effort to produce gold in China since the early 2000s. So, is it 6,000, 8,000? I mean, on the back of it, I could have shown you where China had 25,000 tons already. Once the Brics currency does get released, and they have said that gold is going to be one of the components that backs the currency. Now, one of the questions is how much, how big of a percentage? Is it 20%? Is it 40%? I don't think it'll be more than 40%. But then you got to do the math, because if the Brics currency is what settles trade worldwide, there's got to be a lot of currency. And that means there's got to be either a lot of gold, or the price of gold has got to be a lot higher for the gold that's actually backing the currency. So long story short, I do think that for their own benefit, if you're sitting on 30, 40,000 tons of gold, wouldn't you want to revalue that higher at some point? So yeah, I think absolutely China is in their best interest going to revalue gold higher. And one of the things that does is it makes it really hard for anyone to catch up to their hoard, because it's so costly to purchase each ounce. So, I mean, if they revalued it to pick a number, 10,000, 20,000, 50,000, whatever, it would make it really difficult for nations that didn't have gold but want gold to catch up in the game. That it is a plan, and the powers that be all over the world understand that if they want to implement their policies, their way of life, the U.S. can no longer be an impediment. And how do you do that? You collapse the U.S. So, I mean, everything that's being done and everything that's been done, and I started, like I said, in 2007 writing that it's obviously a plan to torpedo the United States, because the policies that they were putting in place all along have been too stupid to not be the actual plan.
Recently, both gold and silver face challenges due to a stronger dollar and higher bond yields. These factors have hindered their ability to regain bullish momentum as safe haven demand has waned. Expectations that the Federal Reserve may not cut rates in 2024 have also weighed on precious metals. Fed Governor Michelle Bowman's comments underscored a stance of maintaining current policy rates to manage inflation, with openness to further hikes if needed. Silver's performance has been more volatile than gold, partly due to its industrial applications. Despite resilient economic data sparking buying interest, the stronger dollar and higher yields have countered these gains. Market dynamics have been further complicated by significant trading volumes in paper silver, surpassing annual mined production on certain days, suggesting efforts to suppress prices. Currently, gold prices have retreated to the $2,280 to $2,300 range, with silver around $28, $75 to $29, aligning with key technical supports and moving averages. This consolidation phase indicates a potential bottoming process in the market. Bill anticipates that gold could target $2,900 and silver could aim for $32.50 in the next upward move. Despite the recent pullback, such corrections are normal in volatile markets influenced by technical indicators and external market forces.
As far as the metals are concerned, they broke out. I put an article out on May 11th. Not an article, basically. I put it up on my website. I showed some charts and said that it is likely that gold would go to new highs, silver would break over $30, and that did happen. We got up to about $32.50 on silver. We got to $24.50 on gold. They were both severely overbought, and were overbought for a fair amount of time. So those gains were naturally going to be digested. And of course, you got the powers that be that don't want higher gold, don't want higher silver prices because they're direct competition to fiat. I think it was last Friday. There was basically the amount of silver that's mined in a year's time. That was equal to the amount of trading that was done on COMEX on Friday. So I mean, they smashed this with paper again, with the same charts. We're definitely no longer overbought. We're closer to oversold than overbought. First, we'll start with gold. Gold has pulled back to this 2280, 2300 level. So we've had a pullback there. Silver has pulled back. I think it got down as low as 2875, 2880, something like that. And on the chart that I showed, There's definitely support at the 28.50, 29 level. And there's a moving average that's right here at 29. And if you look at what I talked about in the first article, the MACD, the moving average convergence divergence, has declined, and at this point fairly close to forming another hook to turning to the upside. So silver pulling back to 29 is absolutely where you should have thought that it would pull back. I mean, nothing goes straight up. Nothing will go straight up until we have a revaluation. Then it'll be like a light switch, and poof, you'll have new prices that are totally unrecognizable. On this move, on the next move higher, and I think the next move higher, you could see it beginning immediately. I think we're in the bottoming. We're digging on that $29 level as we speak. I think this is going to bring us probably to the 34 to 37 level. We'll be overbought, and you'll see another pullback. And then I believe that 32.50, the previous high, or 32 range, will again be the support. So this is it's totally natural. Anybody who was disappointed that gold or silver didn't keep going once it hit 32, 32.50, you don't understand how markets, normal markets work. And these are not normal markets. But when you get as severely overbought as we were, you're going to get a pullback, and we have had that.
The outlook for gold and silver remains optimistic in the coming months. Analysts anticipate new record highs above $2,450 for gold, particularly if the Federal Reserve proceeds with multiple rate cuts this year in response to a more pronounced than anticipated decline in inflation. Silver, which experienced a notable breakout earlier this year, could surge to $35. However, achieving these longer-term targets hinges on a bullish reversal in the short term. Share your thoughts on Bill Halter's prediction in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.